So let's talk about one particular thing that President Trump addressed on Tuesday, and that's this $1 trillion for infrastructure.
Yeah.
And that sounds really encouraging to people who are looking for fiscal stimulus, but a lot of people are questioning, how are we going to pay for that without running up a big deficit? What are the options available to him?
Well, the plan that Wilbur Ross and Peter Navarro, two of the president's close economic advisors, now Secretary of Commerce in one case, proposed is a tax credit plan. They would offer private equity and private companies tax credits against $130-odd billion worth of investment in public infrastructure. That's a good start, but by definition, if it's private capital, they're going to be looking for a return, which means the kinds of projects that would support are projects that produce revenues, tolls on bridges and tunnels and highways, electrical utilities that can charge ratepayers to pay back the cost of that capital. So it's a start, and it should create some significant new investment, but it's going to be investment of a very particular sort.
And in fairness, that was a plan that was brought out during the campaign.
Yes.
And let's assume for the moment they're going to take a look at a blank sheet of paper.
Yeah.
Include that. We have Gary Cohn today reportedly meeting with senior advisors to really come up with a plan. If you had a blank sheet of paper, what would you do?
Well, let's start with where we are today. Where we are today, the government spends about $100 billion a year just spending grants and credit subsidies for various forms of water infrastructure, wastewater treatment, highways, public transit.
So that's baked into the economy already?
That's in the budget, that's baked into the economy already. So if you want to spend another $1 trillion, you're basically over 10 years, you want to double that.
Right.
And so, without putting undue pressure on the budget, we're already running a $500 billion deficit. It's smaller than it has been in 10 years, but it's still a significant deficit. Without putting undue pressure on the deficit, you're going to have to figure out a way to finance this.
And how do you do that?
Private capital is one, so that's the tax credit program. A number of people in Washington have been talking about an infrastructure bank.
Yes.
There are not a lot of details around that, but this could be a vehicle where the government itself puts in effect, equity in the bank and raises third-party capital.
So sort of seed money. The government puts in some money.
The government puts it, exactly, and it puts in private capital. And again, that bank, because it's going to need to pay back its debt and presumably provide a return to taxpayers on its equity, too, is also going to need to fund projects that can be tolled, that can generate revenues. So it's a class of infrastructure that we need. But there's a whole range of infrastructure that unfortunately we're just going to spend some money on. Our roads are in serious need of repair. Our bridges, the American Society for Civil Engineers has identified a couple of $1 trillion of just repair and maintenance that needs to be done. And this is an important part of what the government does to promote economic growth, right? To reduce congestion, to speed the connections between different parts of the country, to make sure we're drinking clean water and therefore improving our health. These are important public functions, and if you look, the federal government has really fallen down on the job over the last 15 years.
So one place the federal government has been involved in for quite some time is financing of housing.
Yes.
And there's been these essentially public-private partnerships that have financed housing.
Yes.
We didn't hear about that in the president's speech. Why not?
It's a really complicated topic. And, Congress took a swing at the plate 3 years ago on housing finance reform and just got bogged down in the details.
Now, this is Fannie and Freddie?
Well, you've got Fannie, Freddie, Ginnie. You have the Federal Home Loan Bank System, which nobody talks about, but has $1 trillion of liabilities of its own that support mortgage credit formation. But Fannie and Freddie is the big issue, a big unresolved issue. We took them over and put them into conservatorship during the financial crisis, and there they remain.
And are we going to spin them out?
The new Secretary of Treasury talked about that early on. Then when cross-examined on the Hill during his confirmation, he dialed it back a little bit. But right now, given the impasse on the Hill, it really may be the only practical alternative, is to recapitalize them, re-regulate them much more heavily than they were regulated before, and then re-privatize them. There's a lot of resistance to that, but it actually, I think legislatively and administratively, it's probably the path of least resistance.
With or without an implicit guarantee of the full faith and credit of the United States government, which is a problem with Fannie and Freddie before.
It was a problem before, but the real problem with Fannie and Freddie before was they just were undercapitalized. The regulators let them operate without sufficient capital.